The balance between the two is called savings. And then you invest that surplus in a way that your capital is working for you at the same time that you're working for you. To the extent that you can solve problems, that you can generate utility, irrespective of your customer, to the extent that you solve more problems than you create or consume, you're going to do fine. The people who aren't going to do fine are the passive people. The people who just show up, who believe that the world owes them a living. Other people who won't do well are envious people. People who look at people like yourself who have solved problems and made money, and they're envious over the fact that a problem solver makes more money than a problem creator. People don't like to view themselves as problem creators. That notwithstanding, that group of the population, and it's very large, that consumes more utility than they produce, are in and of themselves problems.
Things have moved quite a bit in the gold and silver space, especially over the last, I guess we could say 18 months. It's interesting to me. I had a conversation with a friend of mine who's a high price securities lawyer, and we were talking about gold. And he said to me, it's just a trade. That's all it is. Because if you really think that the economic structures as we know them are about to end, then you shouldn't be buying gold. You shouldn't be buying silver. You should be buying guns and canned tuna. And I'm curious here, what would your response be to that?
I'd love to debate him. I do think, frankly, that it wouldn't be completely out of line for people to buy guns and ammo. But that misses the point. What you do with gold, I think, is that you insure against a contingency, not a certainty. I'm struck, too, that you mentioned the period 18 months. I think moves in 18 months are headlines. I think moves over a decade are wealth. And I would urge your younger listeners to pay real attention to what I just said. I began once again systematically saving in gold in the year 2000. And I keep an alternative ledger personally. I keep a US dollar ledger and I keep a gold ledger. And in my gold ledger, I'm astonished at how cheap things are. The price of housing, even in Toronto, has gone down, measured in gold. The price of groceries has gone down. The price of energy has plummeted. You might mention to your lawyer friend that even legal fees measured in gold have fallen in 25 years. I own gold as insurance against a contingency supported by math. And I hope that gold never comes in useful. But the math tells me that it is. I suspect that your securities attorney friend, while very bright, is transactional. I think he probably thinks his life is a trade. I think that there is room in a portfolio for gold to occupy at least three roles. One, insurance, which is physical gold. The second is in the investment bucket in your portfolio, which are high-quality gold stocks. Gold stocks where their margin increases faster than the gold price goes up. And the third is speculation, the smaller gold companies. And I would love to have a discussion with your securities attorney's friend about how he views the rest of his assets or even his skill sets. Is there anything in his life, his dog, his kids, his wife, that aren't trades? I believe, and by the way, I'm not a trader, but I am a speculator. But I completely disagree with him. Not that I disagree that one shouldn't, for other reasons, buy guns. I believe myself that I'm an optimist. I believe that we'll get through the period that we're headed towards. Because I believe in the creativity and persistence and tenacity of humankind. I believe the fact that our society, the US and Canada, is permissive enough that a group of young folks can take over a garage in Sunnyvale, California, and out pops Google. And I believe that'll continue to happen, which is a different way of saying I believe our individual initiative and capacity and tenacity will fund over time our collective stupidity. But I believe the next 10 years will be tougher than the last 40 have been.
Short-term movements create headlines, but long-term accumulation creates stability. Many experienced investors track their wealth not only in dollars, but also in ounces of gold, revealing a surprising truth. Measured in gold, the cost of living has fallen dramatically over 2 decades. Housing, energy, food, and even professional services look cheaper when compared to gold's preserved purchasing power. This illustrates why physical metal remains relevant, not as a doomsday asset, but as a counterbalance to monetary erosion. Gold's value lies in its ability to maintain buying power when currency systems become strained or when policy decisions accelerate inflationary pressures.
Well, I think the future for young people is the brightest it's ever been. But it's up to young people to take advantage of those opportunities. One thing that I see is, unfortunately, that we have bred a generation of consumers. Actually, 3 generations of consumers. Ours was the first. Wealth isn't created through consumption, it's created through production. Uh, when I look at a 30-year-old who has invested in his education or her education and who has the skill sets necessary to employ capital or deploy capital. In other words, where they have enough training and enough acumen that they can generate utility for the market. The circumstance that they face is the brightest circumstance in recorded history. For the simple reason that all of the people who are on top of them in the feeding chain are my generation, and they're all dying. There's a 40-year skill set going away. Now, if your skill set is delivering mail, you're going to be replaced by email. You're toast. But if, as an example, you're a blue-collar person, male or female, who can operate a jackleg underground in a mine, you're going to be making $140,000 this year, and your wage is only going to go up because the only other people on your shift are in their 60s, and they can't lug that equipment around very well. When you look at the structure of the Canadian financial services industry, the people who run your banks, who run your insurance companies, who run your wealth managers, who run your investment managers, these folks all look like me. They're not long till the grave. And they are going to need to be succeeded by somebody, but they aren't going to need to be succeeded by somebody who doesn't have any skill. The people who have the skill have the brightest future in the history of humankind. When I was 16, 17, 18, in the decade of the 60s, I remember being very concerned. You know, in the U.S., we had the war on poverty, which we lost, and we had the war in Vietnam, which we lost, and we had all kinds of social disruption. To go to a school in California, you basically had to wear a gas mask, you know, because of tear gas and stuff like that. And I was concerned about all this. And I remember talking to my grandfather with some concern about stuff like that. He said, sit down. Hey, listen, you know, I realize from where you sit, you're pretty dramatic about stuff. But you're a smart, hardworking kid. You're going to get through this. So just for the record, my generation had a couple challenges too. We had the Great Depression, no walk in the park. Right before that, we had World War I. Right after, we had World War II. And then we had nuclear arms. We got through it just fine. And you'll get through it just fine. There's going to be some tests and there's going to be some challenges. The next 10 or 15 years, there's going to be a lot of economic disallocation. We have just been through the 40 most benign years in human history. You know, I mean, 1982 to 2022 was, for the most part, just right. And this next part isn't going to be just right. We're going to have a reckoning because, as a society, we spent a lot of our seed corn. But the people who understand that in order to consume utility, you have to generate more than you consume, are going to do spectacularly well. The people who believe that life's a trade, not so much.
Gold's role in a portfolio can take multiple forms. Physical metal acts as insurance. Well-managed mining companies serve as investments with leverage to rising prices. And early-stage explorers represent pure speculation, high risk, but potentially high reward. Treating gold as a single monolithic asset misses the nuance. Investors who take a longer-term view understand that gold can complement both defensive and opportunistic strategies. The point isn't fear of collapse, it's preparation. Economic transitions, such as rising interest costs, sovereign debt strains, and shifting geopolitical alliances, make diversification more essential than ever.
You just basically summarized what I said. You said solving problems. I said generate utility. You become wealthy by generating more utility than you consume. The balance between the two is called savings. And then you invest that surplus in a way that your capital is working for you at the same time that you're working for you. To the extent that you can solve problems, that you can generate utility, irrespective of your customer, to the extent that you solve more problems than you create or consume, you're going to do fine. The people who aren't going to do fine are the passive people. The people who just show up, who believe that the world owes them a living. Other people who won't do well are envious people. People who look at people like yourself who have solved problems and made money, and they're envious over the fact that a problem solver makes more money than a problem creator. People don't like to view themselves as problem creators. That notwithstanding, that group of the population, and it's very large, that consumes more utility than they produce, are in and of themselves problems.
While challenges loom, younger generations face extraordinary opportunity, provided they develop valuable skills. Demographic trends across North America show that a wave of retirements is approaching in fields like finance, engineering, trades, and resource development. As experienced workers age out, the demand for capable replacements intensifies, but success won't favor passive participants. It will favor creators, builders, and problem solvers. From technology to mining to energy production, the economy rewards those who generate value rather than only consume it. The next decade may bring volatility, but it will also open doors for those equipped to step into leadership roles.
I think it would be useful for Canadians, young Canadians, to study history. The aftermath of the last Trudeau regime was Chrétien. Chrétien didn't adopt arithmetic because arithmetic was consistent with the liberal narrative. He adopted arithmetic, slashed the federal budget, because Canada was frozen out of credit markets. Canada went through a soft default. Mercifully, you had a guy, Jean Chrétien, who was acceptable to the Laurentian establishment, but could still add, subtract, multiply, and divide. Canadians don't remember that period of history when your best your best provincial issuer, Ontario, was frozen out of credit markets.
Every generation experiences turbulence, and today's economic uncertainties are part of a repeating pattern. Past decades brought wars, depressions, social upheaval, and inflation shocks. Yet societies adapted and rebuilt. The difference today is the sheer scale of debt and the disconnect between liquidity and solvency. Easy credit has masked structural weakness, but eventually markets demand accountability. When that moment arrives, confidence can shift quickly. Still, history shows that disruptions are followed by periods of renewal. The key is preparation, building skills, savings, and intellectual capital to navigate the transition rather than be overwhelmed by it.
Yeah, well, it sort of reminds me of that great Hemingway quote. They asked Ernest Hemingway how, after having sold all those books, he managed to go broke. And he said, slowly at first, then all of a sudden. People in the United States and Canada confuse liquidity, the fact that there's a lot of cash in the system and a lot of credit, with solvency, the fact that we owe more than we could rationally pay back. The lines between liquidity and solvency cross when they do. I can't tell you when that's going to be, but that will do a tough thing to confidence. By the way, we'll get through it. You will not see the end of our social system in your lifetime. What you will see is 10 or 15 years where we have hopefully a slow motion reckoning. I can't speak to Canada because I'm not Canadian. I believe that as bad as we have fouled things up in the U.S., there's probably still more social opportunity in the U.S., which is why, despite the fact that we have the guy leading the United States that we do, more Canadians are coming to the U.S. than Americans going to Canada. But if you look at it more as a human problem than a geographical problem, I think you sum it up with a poem my grandfather taught me. It goes like this: when your outgo exceeds your income, your upkeep becomes your downfall. It would be useful if the voters and if Parliament and if Congress remembered that little ditty. And it exists in a non-financial sense too. It's incumbent on somebody your age to learn how to solve problems, to generate utility. Occasionally, rather than going out for beer with your friends or going to a hockey game, you need to stay home and read a book. I would say that one of the great benefits of my life is I've consumed, between 1 and 4 books a month for the last 60 years. And investing in my own education, while it might be boring compared to things like chasing girls or chasing boys or, going to hockey games or whatever, building up that intellectual capital, which gives you the ability to solve problems. And while you're at it, building your own personal reputation, your brand, so that people want to do business with you. And then once they've been attracted by your brand, your education gives you the ability to generate value. That's all savings too. I read a thing this morning where in the United States, almost 40% of the population that has credit card debt in excess of their savings, which is to say that they have negative net worths. That same group of people, likely, who have liquidity deficits, probably have a deficit in intellectual capital generation, which is to say that they have a job which they view as a place to go to make enough money to sustain their lifestyle. They don't view that job as the opportunity to create more value than they consume. And because they haven't made the connection that in order to get ahead, you have to solve problems, they haven't made enough money to support their lifestyle. Which is to say, people have lived their lives the same way they vote, stupidly.
True wealth is created by producing more value than one consumes. This applies not only financially, but intellectually. Developing expertise, cultivating a reputation for reliability, and solving real problems are forms of capital as important as money itself. Many households today face negative net worth, driven by overconsumption and underinvestment in education and skill building. But individuals who approach life with discipline, saving consistently, learning continuously, and contributing meaningfully will thrive even in periods of economic adjustment. The future won't reward entitlement, it will reward capability. And for those who prepare, the next era may be the most promising yet.